Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 23rd, 2026, and we're diving into Sallie Mae's recently released fourth quarter and full year 2025 financial results. Joining us is John, a senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Sallie Mae's performance, especially given their significant role in private student lending.
Revenue and profitability overview. Let's start with the financial highlights. Sallie Mae reported a net income of $233 million for the fourth quarter of 2025, with net interest income reaching $377 million. John, how does this compare to their previous performance?
These figures represent a strong performance for Sallie Mae. The net income for the full year 2025 was $745 million, which is a significant increase from the previous year. The net interest income of $377 million in Q4 shows their ability to maintain a healthy margin despite the competitive pressures in the lending market.
And what about their non-interest income?
Non-interest income for Q4 was $77 million, which is a substantial increase compared to the same quarter last year. This growth is primarily driven by gains on loan sales and other income streams, indicating a diversified revenue base.
EPS performance and analyst expectations. John, let's talk about earnings per share. Sallie Mae reported an adjusted EPS of $1.12 for Q4 2025, surpassing the forecasted 95 cents. What does this tell us about the company's performance?
This is a clear indication that Sallie Mae has exceeded market expectations. The forecast was based on a survey of 5 analysts, and beating it by such a margin highlights the company's operational efficiency and effective cost management strategies.
What factors contributed to this EPS outperformance?
The outperformance can be attributed to a combination of higher net interest income, effective cost control, and strategic loan sales that boosted their non-interest income. Additionally, their share repurchase program has likely contributed to the EPS growth by reducing the number of shares outstanding.
Strategic initiatives and share repurchase program. Sallie Mae has announced a new $500 million share repurchase program. How does this align with their strategic initiatives?
The new share repurchase program is a strong signal of Sallie Mae's commitment to returning capital to shareholders. With $33 million remaining under the 2024 program, this new initiative will further enhance shareholder value and reflects confidence in their financial stability and future cash flows.
What impact do you expect this to have on the company's stock performance?
Typically, share repurchase programs are viewed positively by the market as they can lead to an increase in EPS and provide support to the stock price. Given the size of this program, it should bolster investor confidence and potentially lead to upward pressure on the stock.
Operational efficiencies and future outlook. John, let's discuss operational efficiencies. Sallie Mae reported a net charge-off rate of 2.42% for Q4 2025 and an efficiency ratio of 34.6%. How do these metrics reflect on their operations?
The net charge-off rate is slightly higher than the previous year, but still within a manageable range. The efficiency ratio improvement from 38.5% in Q4 2024 to 34.6% in Q4 2025 indicates that Sallie Mae is effectively managing its expenses relative to its income, which is a positive sign for operational efficiency.
And looking ahead, what does their 2026 guidance suggest?
The guidance for 2026 is optimistic, with an expected EPS range of $2.70 to $2.80 and loan originations growth of 12% to 14%. This suggests that Sallie Mae is confident in its growth trajectory and ability to capitalize on the demand for private education loans.
Key takeaways. Before we wrap up, Let's hear from Sallie Mae's CEO, Jonathan Witter, who stated, "We delivered solid results for 2025, expanding originations, improving our net charge-off rate, returning capital to shareholders, and building further capabilities to serve more students and families through our new private credit strategic partnership." John, what are your thoughts on this statement?
CEO Jonathan Witter's statement underscores the company's strategic focus on growth and shareholder returns. The emphasis on strategic partnerships and capital returns aligns with their long-term vision of supporting education financing while enhancing shareholder value. This positive outlook for 2026 and beyond is encouraging for investors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analysis. We'd love to hear your thoughts on Sallie Mae's performance in the comments below.